All right, hey guys, Sam here back with you. Had some members interested in taking a look at EOS. So I've got EOS here to Bitcoin. This is the 4-hour chart on Binance, and the reason I'm on Binance now, I'm going to go over here to CoinGecko and we can look at this project. So, very high on the score here. This is a very popular project. So at 71, we know this is a major project, and market cap of 5.4 billion. This is a major crypto. So we can look down here. Here's the only thing I don't like about it. Almost half of the volume is traded on BitHum in the Korean won. I don't love that, but we can see that we do get at least almost 9.3%, almost 10% of it traded against Bitcoin on Binance. So I've got some people in this. So let's go take a look at it. So this should be fairly easy to spot, right? So clearly we've got an uptrend. So whether you want to put an Elliott count on this or not, we've got a nice series of higher highs and higher lows. Here's our little correction that we get, but then we start again, higher lows, higher highs, higher highs. All right, so then we've started potentially the first correction. So you can look at that and say, okay, well, I've got a trending market. And it's prone to these corrections, which have proven to be good opportunities to re-enter the market. So where does the Elliott count come into play? Well, let's see if we can make some sense of this. So I can start here. I've just wicked off the lowest low here before we start up. So working from that, I can see I've got a pretty reasonable, 5-wave structure here. Then I get my correction, and then I start again. Oh, sorry, ran out of bullets there. So then we go again. 1, 2, 3, 4. We go up for a 5. Okay, so what do I have there? Well, I have two 5-wave structures. What does that do for me? Well, in an Elliott context, so we've got a trending market. We've got impulsive markets here. We have all impulsive as we have no overlap of the fourth wave to the first wave. You can see it in both of these. So again, as I will often tell you, the key to Elliott wave trading is the fractal nature of it. It's waves within waves. So we put this now in a larger degree. So I go to the Elliott tool here. I'm going to work from back here. So I'm going to get a completed 5-wave sequence, which to a larger degree would give me a 1. Then I get my correction, that's my 2. Then yet again, I get a completed 5-wave sequence to give me my 3. I'm putting in some sort of a 4 here before I go up again. Now let me change that color and put it in a larger degree so it makes sense. Okay, so we can get, we can get a complete 1-wave correction. So let's check that correction, see if it's technical. So working from my absolute low here to the top of my wave 1, knowing that a wave 2 can be anywhere from the 50 to the 786. I come down here, I challenge this wave 1 high, but I don't overlap. So I get kind of an abrupt correction here, and then after that, so I'm in a 4-hour. If I went down to a 1-hour, we can see there. I'll do it for you. So there's some subdivision here. So if I move back over here, it's abrupt, but we get an A. Here's our B, and then we finish with a C wave. So I get a very abrupt, but some complexity in it. So I get an A, a shallow B, right back to the Vegas wave, come down for my 2. Right. So then I start up again. So let me scrunch back up a little bit so we can put it back in context. Okay, so if indeed I've got a 1-2 and I've got all this nice subdivision, here's the trademark shallow C wave that we see so regularly in crypto, where we get an A, then the B, and then the shallow C. So if I've got a 1-2 and I've gone up for my 3, well, now we can look to make some sense of how that's trading. So again, just kind of scrunching up here a little bit. So if I'm going to complete the larger degree 5-wave structure, well, then I'm anticipating a relationship between my second wave and my third, where I'm going to look to identify a reasonable low-risk opportunity to trade into the fourth. So let me get it right on there. Okay, so it's possible. It's possible that we put the fourth in right here because we can see we get some subdivision here. So we get an A, we get a B, and then we finish here in a C. Now take the wave off. We don't need that on there right now. So potentially my 4 is in here. Now, it's kind of a wait and see. If that ABC plays, and we've come right to the 38.2, which is the most common spot for the fourth. So we want to wick off the one wave here. So we're not even close to that, but interesting that the one wave comes in just a few ticks ahead of the 618. So we can look at that and say, okay, if the 4 is in, well, now I'm expecting to see a 5-wave sequence start, just as we did here in the third. So I'm expecting a 1, 2 to go up and complete the 5th of the larger degree. Well, if that's the case, so let me open it up just so we can see it a little bit better. So if I've completed this here, well, I could be starting a diagonal here to start the beginning, the 1 wave of my 5th. So I could very well have a 1, 2. I don't love this, so likely we're here. Okay, and I'll show you why. I'll go to a different color here. We'll go back down to subminuet. Okay, so this unlikely to be my 3rd because if I measure the length of my 1 from what may be my 2, you see here we don't get to 100%. So the 1 wave would be longer than the 3. We know the 3rd, it doesn't have to be the longest, but it can't be the shortest. So when you're first qualifying, you're always looking to see if you can get the 3rd wave longer than the 1st wave. So the reason that I immediately jump over here, well, one, I can see now that I measure it, this is my highest probability zone for my 3rd. So potentially I've got my 3rd here. But this action here now is problematic because it's spread against Bitcoin, and now Bitcoin is starting to break up. So potentially, I've got a diagonal here. Now, if this comes down, takes out the 2 low, well, then that disqualifies this count. So it's already a bit extreme. So since it's likely a diagonal here, we're going to draw from the 1 to the 3 high. Now you can see I'm coming up, approaching the 786. Sorry. So we may well, have a more complex correction. So if this is going to fail, right? So if you're now looking at this saying, if I'm going to go down and I'm going in my 4, if I'm going to overlap my 2, well, then what does that mean? Well, then potentially what we have here is a more complex correction. So we'd have an A into a B into a deeper C. So that means we're moving the 4 over here. And then we have an ABC of a larger degree. So let me put that in. I'll put that in white, and we'll go to a larger degree coming up here. So potentially, this is what I think is likely about to happen, given that abrupt action. That does not look like a 4. That looks to me like what's about to happen is we're going to come down, overlap the 2. We're not there yet, so I don't want to get ahead of myself. But it looks like that could be what's underway here. So I'm going to take this up a degree here. Okay. So that wouldn't disqualify the count. That just means that we've got a more complex correction happening. So potentially we get a zigzag. So a 3, 3, and then we'll look for 5 waves to come down to complete the 4th. Now, what matters relative to this count in terms of keeping it qualified? Well, we certainly don't want to overlap this 1. And now as this moves away, so we might look at this and say, well, could that be the B? Well, if that's the B, we know a B, like a 2 wave, can go anywhere from the 50 to the 786. We get through the 65, but we hold the 786. So that's potentially a B wave playing and setting up for the next entry here down where we get this nice confluence zone where we get the negative 23.6 from the pull from the swing high to what I'm proposing is the A low. So I get this nice little pocket here where we may see some support. Now we've got this prior confluence here. We don't want to overlap this, but we've got this area of indecision here where we put in this 4th, which would be a likely target for this. And then seeing now that I've got 3 pivots, I'd work from this low up to this high. And this kind of is interesting to me, so I can pull some of those outside lines off. I don't need them. So I can look here and say, well, that is kind of interesting to me. Now it's a question of when do we get there, right? So we know that crypto is prone to these shallow fours and these truncated C waves. This would, in effect, if we're just going to keep rolling down, this would give us a double bottom here, potentially, as we hit the median line. We know from Andrew's median line trading principle number 2 that very often we will see a pivot at or right on to the tick, the median line. So this is an area I want to pay attention to. So it's a question of what do I get a reaction there as to whether or not I would want to look for a new long there. I mean, right now, it's just kind of free falling here. So we're getting this straight move down, which would imply that the ABC is more likely what's underway as we just keep rolling down, because this does not look like a 1, 2, 3, 4. My guess is we're going to come down and challenge this low. We'll see what kind of reaction we get there. So you got a couple of scenarios here. So we could come down here and pivot and then start back up. That's a wait and see kind of a thing. We could get a reaction there, pivot, and then come back down yet again. So this is where we love it down here. So I've got this confluence zone here. So I'd like to see a reaction, but for all we know, it just keeps rolling down. It's a wait and see kind of a thing right here. But I think this is unlikely. Characteristically, this does not look like a fourth, so I think we're likely to be putting in our C wave here, and so we wait and see what the reaction looks like here. I prefer it down here because of that confluence. But take note, I have confluence here. I have the median line, the 38.2, and I have a prior pivot, and I have some structural support here. So I'm not saying that this couldn't be our pivot. But here, I've got more confluence. Do you see here? So I've got 3 things here. I got 4 things here. I've got that same structural support. I've got the median line. I've got the algo target, and I've got the 50%, which I know is a high probability zone for a fourth. So if that's going to keep going up, if this count is going to stay valid, and we're not going to disqualify it. How would we disqualify it? Well, if we're going to come down all the way and overlap this one. But if we're going to ultimately get back up towards the larger algo target up here for a 5th wave, then it's got to get there like this. So I think we're going like that. If we're going to hold this count. Now we'll see. We may hit the median line while I'm making this video. So it's kind of a wait and see here what kind of reaction we get if and when we tag the median line. I'd expect a reaction there, as to where it goes. So ideally, you'd stay within this and get one more drop down. That would give you a more complete C wave down into our confluence zone. And then we've got our target up here. So we'd have a relatively low risk area to be entering here. Now, personally, I wouldn't give it, if I'm going to enter here with this as a target, that's more risk than I'd want to take. So I wouldn't see there. That's only 3 to 1. I would rather, if we're going to blow through this zone here, I'd tighten it up. I would do it. I wouldn't give it that much room. I'd rather take the small loser and then reevaluate if we're going to come down and challenge the wave 1 high and come towards the 618. I want to see what kind of complexity we get and what kind of reaction I get there. With Bitcoin, starting to move again. I just wouldn't want to give it that much room. Just why? I have no problem taking a stop. I'll take a stop like that, a small loser like that. Not going to hurt me. As I always would tell you, it's just a jab. You're not going to knock me out with that. You're not going to blow up my account. I'll take the small loser if I need to, and then reevaluate. See if I like it down here. So I get that same good risk reward down here, but now my upside. Now I've got. What do I get there? 11.8 to 1. All right, so my view is always take the small loser. You can always re-enter the market. I've shown you many trades where I've been stopped out. It's always better to be out and then reevaluate than rationalize moving your stop down. Oh, well, maybe it's going down to the 618, so I'm just going to give it a little more room. I advise against that. You can get in trouble doing that. Better to take the small loser, get out. Reevaluate. Let the market show itself. Look for the tells that you've got a pivot low in, then reevaluate. And that's how you can continue to stay consistent with the count here. But you may not catch it the first time. So take the small loser, reevaluate, and then if I have to take a small loser here and then set up for an 11 to 1, no problem. I get no problem with that. So just some, friendly advice in terms of, money management. Again, don't let yourself get hurt on any one trade. It's never worth it. You could always get back in the market. All right, guys. Whoa, man, I've been long-winded today. All right, well, this is going to be interesting to see what happens. So pay attention to that one. So that's one I would alarm to look for a reaction there, potentially a double bottom. We'll see what happens. All right, guys, that's it for now.